Hello everyone. A lot has happened over the weekend. It looks like US and China have actually reached an agreement ahead of the Trump-Xi meeting this Thursday. Then Trump again claimed India has completely stopped importing Russian oil. What's new in it? Meanwhile, IMF have raised India's GDP growth forecast and US inflation came lower than expected. All this we are going to discuss in our regular pre-market report video for today, 27th October 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Over the weekend, first on Saturday in the Asian Summit, both American and Chinese officials said that they reached an framework agreement about the trade deal between the two countries, which later on Sunday confirmed by US Treasury Secretary Scott Bessent, and he described that as a very successful framework agreement. In addition, he said the agreement covered all the related key issues like China agricultural purchases from US, TikTok, trade, rare earths, and broader bilateral relationship, etc. They haven't confirmed what's in detail, rather, they just gave the headings. Maybe after the Trump and Xi meeting, they might give all the details, and again, this was confirmed by Chinese officials as well. So, it seems US and China are going to have the trade deal, and this is very positive from the global momentum and sentiment perspective. Just for info, at present, Trump is in Malaysia for the Asian Summit, and this week he is going to travel to Japan and South Korea. And in South Korea only, this coming Thursday at APEC Summit, he is going to have meeting with Chinese President Xi. Then the second topic, in Malaysia again, Trump claimed that India has stopped buying Russian oil completely following the new US sanctions on top two companies. However, again, our government has denied these claims. This is not Trump's first claim about India's oil imports from Russia. But different thing now is, during weekend, Reliance has issued the statement that they will comply with all EU guidelines and the Indian government direction. And they also mentioned that they will diversify their crude sourcing strategy so they can continue to safeguard their operational stability. So in short, it seems India is reducing the oil purchase from Russia. Then third, during weekend, IMF increased this fiscal year India's GDP growth rate to 6.6% from earlier April projection 6.2%, which is good. However, IMF trimmed next year growth rate forecast to 6.2%. They cited global uncertainty as the reason. Either way, this is positive for overall sentiment, though I don't think it will have immediate impact on today's price action. Moving to US market, last Friday before their market opening, Bureau of Labor Statistics released the US consumer inflation number for the September month. Please note, this data was supposed to release on last October 12th itself, but because of US government shutdown, the data release was delayed. The US government is still on the shutdown, but due to some internal policy, they released the CPI inflation data last Friday, and they are going to release the PCE inflation data coming Friday. Anyway, in the SNP, the top two row is core inflation, that is without food and fuel, whereas the bottom two is overall consumer price index CPI with food and fuel. So on yearly basis, core inflation increased 3% and monthly basis it increased 0.2%. Both of them were less than the analyst expectation, and more importantly, it's less than the August month. Then if you see the overall inflation, here too the story is the same. On yearly basis, it came as 3% and month over month it increased 0.3%. Both of them less than the analyst expectation. Just on yearly basis alone, it came above the August month, but market were expecting much more worst number. So in short, the macro is very good and this supports the Fed to cut the interest rate on this coming Wednesday. In response, throughout the day, Friday night, US market traded positively and all three major index hit the all-time high value. In the end, Dow Jones increased 1%, S&P 500 was up by 0.8% and Nasdaq outperformed was up by 1.15%. In case of VIX, it dropped near 5% and moved below 16.5 from near 17.5. About oil, because of all these US and Europe sanctions on Russian oil, it further increased by 1%. Hence, at the time of this video, WTI crude trading at 62 US dollars per barrel, whereas Brent crude trading around 65.5 US dollars per barrel. Regarding Indian ADR, as it is, both the banking stocks closed positive, whereas both the IT stocks closed negative. However, if we calculate the arbitrage, ICICI Bank ADR and Wipro ADR indicating the negative difference, whereas the other stocks such as Infosys ADR, HDFC Bank ADR and Reliance GDR, those three indicating the positive arbitrage. Hence, overall, Indian ADR indicating very much mixed and no indication of any sector influence or the US market positivity. In line with that, Saturday early morning, GIFT Nifty traded at 25,865, equating that with the spot market is indicating the gap up opening of 30 to 40 points. Then, moving to new India stock specific related info. First, about Kotak Bank. During weekend, they released their earnings and their net profit fell 2.7% year on year and it was below the analyst expectation. Here the profit miss was largely due to 43% higher in the provisions allocation. However, on the positive side, asset quality improved with gross NPA ratio falling to 1.39% from 1.48% in the previous quarter. So Kotak results are mixed and we could say it will be on focus today. Then second, Dr. Reddy's also released their earnings on Friday. I guess it's after our market close. Anyway, their revenue increased near 10% year over year, which beats the analyst expectation. But the net profit increased only by 7% and profit wise it missed the analyst expectation. So again, it's mixed results. Following the results in US market, its ADR slipped by 0.27% with a decent volume. So I guess it seems neutral to negative. Then third, about Reliance, they made an announcement that they are forming an AI joint venture with Facebook Meta. And this JV will focus on developing, marketing and distributing enterprise AI services where Reliance will hold 70% stake while Facebook Overseas will own 30%. And both partners have pledged a joint investment of around 855 crore rupees. Personally, I believe this is positive for Reliance as it strengthens their position in the AI and digital space. Either way, today Reliance price action will be determined by this AI partnership as well as their oil purchasing stance which we discussed earlier. As a summary, US low inflation and US China framework agreement is positive for global sentiment. IMF upgraded India's growth forecast, which is good. Jio and Airtel got valuation upgrades. Reliance formed a venture with Meta, all positive triggers. In ideal case scenario, GIFT Nifty should have 100 to 150 points gap up opening. However, I don't know why US market positivity was not materialized in Indian ADR or GIFT Nifty. I think the reason could be profit booking after the recent rally or market is just being cautious about India US trade deal and waiting to see the actual outcome of the Trump Z meeting. Just for info, at present US future market is trading significantly positive, but globally there are some uncertainty around rising base metal price which could impact the Indian manufacturing companies margins and there is a new escalation in the US Canada trade tensions. Moving on about institutions, in the cash market on Friday, both FII and DII were net buyers. FII net bought for 620 crore rupees and DII net bought for 170 crore rupees. Then coming to derivative market participant wise open interest analysis, in the index options, retail traders or client having net 5.2% of their open interest favoring bullish stance and both FII and proprietary traders having net negative 3.6 and 0.9% open interest respectively on bearish stance. So FII is still maintaining their bearish positioning and proprietary traders inclined on the bearish side. Then in the index futures, retail traders holding 65% of their open interest on the long side, whereas FII and proprietary traders are holding 75% and 57% of their open interest respectively on the short side. So overall positioning shows retail are bullish, but FII and proprietary traders are bearish. Then, as per stock open interest, Nuvama, Oracle Finserv, HUL, Supreme Industries, Ambuja Cement, Mankind Pharma, and Colgate Palmolive are some of the 74 stocks that got an increased open interest along with a negative close, which indicates the short build-up. On the other hand, KFin Tech, SBI Card, Cummins India, Crompton Greaves, Coforge, and ONGC are some of the 29 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build up. About the things to look out, earnings wise, IOC, Adan Energy Solutions, and PNB Housing Finance are scheduled to release their results. So, oil and power sectors will be on focus based on these results. Macro wise, I don't think any major macro is scheduled to release that could influence our market during our trading hours. Coming technical, Nifty opened 40 points gap up about 25,900 but could not sustain and started to drop as the day progressed, then finally closed below 25,800. Thus, on the daily chart, Nifty formed another long bearish candle with a minor lower shadow, indicating pressure with limited buying interest at lower level. In addition, it negated the higher low formation of the previous 6 days with an expansion in Bollinger Band. However, Nifty remained well above all key moving averages with RSI just below 70 and MACD sustaining its bullish crossover, all indicating a short-term consolidation despite the broader positive trend. Hence, on the higher end, resistance is at 26,000 and on the lower end, immediate support is at 25,700. In case of Bank Nifty, similar to Nifty, it also opened 90 points gap up but immediately started to drop throughout the session, then closed below 57,700. Thus, on the daily chart, Bank Nifty formed a bearish candle with a lower shadow, indicating selling pressure with limited buying interest at lower level. Meanwhile, it remained well above all key moving averages with the short and medium term averages still trending higher. However, RSI at 68 is on the verge of a breakdown while MACD continued to maintain a positive crossover, indicating some weakness. Hence, 57,900 to 58,000 zone will act as the immediate resistance, and if Bank Nifty manages to move above 58,000, the pullback can continue further till 58,500 level. On the downside, the zone of 57,200 to 57,100 will act as the crucial support. Regarding the options front, the maximum call option openers was at 26,500 strike, followed by 26,000 and 26,100, with maximum new call option rating at 26,000, 25,900 and 25,800 strike. On the put side, the maximum openers was at 25,500 strike, followed by 25,000 and 25,700, with maximum new put option rating at 25,700, 25,500 and 25,750 strike. Thus, from options data, it indicates that Nifty might trade in the 25,500 to 26,000 range in the short term, with a broader range between 25,000 to 26,500. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.